Hello, welcome to FS Brew. FS Brew is the region's first podcast focusing on all things insurance and Insurtech here in the UAE and the wider Middle East. I'm Vidya. I'm the founder of Forward, a startup that works with insurance companies on their go-to-market digital propositions.
And I'm Ranjit Philip. I consult with corporates and startups in the 0 to 1 stage and help them with new product and new business launches. So in today's episode, we are having a chat with Harald Eltwet, Head of Venture Building at SC Ventures, the corporate venture building arm of Standard Chartered Bank. So it is a pretty interesting conversation, Vidya.
Yeah, no, absolutely. It was an insightful one in terms of how a big, large corporate, a Standard Chartered, has set up this wonderful venture building arm and venture investment arm, which works like an outfit by itself. And they have clear focus on what they want to invest in, which complements the whole banking sector. And insurance falls within that sort of radar itself. So it was good to know, Ranjit.
Yeah,
Um,
absolutely. I think he laid out very clearly that if you want to have the Standard Chartered Bank as a partner or as even as a customer for your fintech, the best way
yeah.
to do is to apply at the SC Ventures Bridge application, and they will respond to you within a defined timeline and take you through their process. And that's a pretty good thing. He emphasized on the word patience a lot. And I think that's what a lot of startups have to learn. They have to be pretty patient in dealing with a corporate.
Yeah.
And I'm sure SC Bank is no exception.
Yeah. No, absolutely. And then think about the use case, right? So if you are under SC Ventures radar and you have a proposition that is complementing the larger financial services sector, that automatically opens your doors to distribution with similar industries, banks,
Yeah.
pretty much different banks maybe, or anywhere else that is falling within the financial service sector. And so that sort of validates it. So if you've got a very clear view as to what the proposition is that can complement, and I think he touched upon it, right? He said something around embedded insurance from an insurance perspective, something around the embedded piece, or something that's to do with the wealth management and savings piece that can be linked in would be typically their focus areas.
Yeah. And also I think it's good to note that he is actively looking at the MENA region, and there are a few projects under the wraps and soon to launch. So I think it's be pretty interesting to watch what happens there as well.
Yeah.
That'd be exciting. And he mentioned two interesting startups, BTO, which is an interesting name. I don't want to say strange name, but interesting name. It's actually Better Trade-off, and it's based in Singapore. So it's all about upgrading financial planning to become life planning. Very nice segue into financial planning. And then another one called Autumn, which is a digital wealth, health, and lifestyle solution kind of a startup. So it's both health and financial and actual health wellness. So very interesting kind of startups that he talked about.
Yeah, no, absolutely. And because they have a good appetite for the MENA region, the well-defined processes, I think it's an exciting time for the entrepreneurs, specifically the Insurtech entrepreneurs, to consider them if their proposition fits with what SC Ventures is looking out for. So all in all, a great episode to listen in, especially aspiring entrepreneurs. This is the podcast you don't want to miss. So listen in.
Enjoy. Hello. In today's episode, we have a chat with Harald, who is the head of venture building at SC Ventures, the corporate venture building arm at Standard Chartered Bank. Welcome, Harald.
Thanks for welcoming me.
Perfect. And now for our listeners, you must be thinking FinTech and banks, there are some implications for you, listeners, from an insurance and wealth management point of view. And it's also good to learn from the banking industry on how they manage and incubate innovative startups. So let's get into it. Let's start with the first question. You had a very interesting career. How did you land into working with a venture builder firm? And also, please tell us a little bit more about your role as well.
Sure. Okay, so I'm not going to go back to the 20 years of my career, but I would say I always wanted to disrupt. It was my first job. I wanted to do something disruptive, and so I joined back then a web agency, which was based in France, and it was in disrupting the way that advertising agencies were doing business. And I thought it was a long time coming that we needed to do things differently. I was very happy to join that company and do things differently. And I think that drive to do something disruptive, different, has been constant in my entire career. And along the way, I worked for consulting companies. And at some point, I launched my own companies. For some of them, I was successful. For some of them, I was less successful. And in the process of doing so, if you're an entrepreneur, you are going to be faced with the investor side of things. And so very early on, I was negotiating term sheets with VCs, and also did in the establishment of seed stage VCs in the process of doing so. So that was my background. I wanted to join a larger corporate that could have the bandwidth to also support the ecosystem and have a mission in doing so, and met with Standard Chartered Bank. They had just set up their venture arm. They were looking for people like me, basically, just to with a little bit of VC experience, with entrepreneur experience, in order to disrupt things. And that's how I got started at Standard Chartered about 3 years ago.
Perfect. Very good.
Wonderful. Tell us a little bit more about SE Ventures itself. It's spread across globally, across different geographies. I think you're headquartered in Singapore and perhaps offices across, but also the work SE Ventures does specifically in the MENA region. And if we can get a little more specific around the financial services sector itself.
Yeah. We only are in the financial sector. We're a big financial institution, so that's what we do. We won't invest or build ventures that are not related to the financial industry, even if it's sometimes a little bit in parallel. But so yeah, SC Ventures, we are about 5 years old. We are turning 5 years old this year.
Okay.
We are the corporate venture arm of Standard Chartered Bank. We do mostly two things. We invest in fintechs. Our sweet spot is fintechs that have already reached a certain maturity. So we look at Series B stage is our preference. And what we'll do is we'll take a minority stake in the business, but we'll connect them to the bank so that they can work with the bank and flourish their business into a use case of the bank. So that's one of the activities that we do. And then the other activity that we do, which is the one that I run, is the venture building piece, which is building ventures from the ground up and making sure that along the way we have all the right support, all the right funding in order to enable these ventures to grow. We've invested in about 25 portfolio companies, and we have launched a little bit over 30 ventures in the course of 5 years. So we've been quite busy. Okay. In the MENA region, we are launching a few startups. One of them I can talk about, two of them I can talk about because they're already public. So one is called MyZoy. It's a remittance platform for migrant workers so that they can send money back home in a sustainable and in a financially inclusive way as well, because we want to make sure that we're here for them and we can include them in the financial industry. The other one is a company called Apro, which is a loan and credit card aggregator, and especially for people new to the market and who don't have a lot of credit history and they need to apply for a credit card and they get rejected by banks, right? So through an innovative credit scoring, we can actually get them the best deal in town, and that's what Apro does.
Got it.
And we have a few other coming, but they're still in the pipe, so I can't talk too much about them.
Right.
Got it. No, absolutely. I think the thin file credit history is an interesting story. I recently went to the US again, and I found obviously my credit history was all in the UAE, and I couldn't even get a credit card or anything without placing a large deposit. So I think I'm pretty sure that's the same situation here as well. From a overall kind of VC environment and funding environment, obviously you've seen with the rising interest rates, suddenly there's a focus on unit economics. Valuations have tumbled down. So from your perspective and your vantage point, what are the sort of key trends in the venture capital / venture building industry that you see in the near sort of term, near 18 to 24 months term?
You're right. I think we are in what we commonly call the VC winter. So it's a reality. It's a reality for the ventures that come and want to talk to us.
Yeah.
And it's a reality for our ventures. So that what that means is it's also a way to rationalize the market. We were seeing some crazy valuation, and simply it's not healthy for the ventures that are actually creating a lot of value. It creates so much noise around it that it becomes complicated to be able to see which ones you want to back and which ones you can invest in. So I think we see it as a rationalization that was necessary.
Yeah.
We see it as an opportunity as well, and an opportunity to partner with VCs that have the same goals and VCs that want to invest in the long term and not just for opportunistic reasons.
Yeah.
I think we're gonna see some interesting consolidation in the next 2 years.
No, absolutely. I think we are seeing that here in the MENA region with the buy now, pay later players. One of them has already gone out of business, and the others are either scrambling for long-term debt or thinking of partnerships with banks and stuff like that. That's going to be very interesting.
You need to be laser focused on revenue.
Yeah.
And not so much on growth or experimentation anymore. So that's one of the key aspects that we look at, either when we invest in a FinTech or Insurtech or when we launch a venture.
Yeah.
Think about generating revenues.
Yeah.
And I think that maturity is coming through across many sectors, the focus on really the revenue versus the growth. Now, you touched upon what some of the criteria that you look at, but tell us what are the most important other aspects that you look at when you evaluate a potential startups to incubate. How do you really decide on them? And especially in the subsectors within the FinTech, how do you focus in something that complements the bank or any other factors that go into it?
So I have the short version and the long version. So I'll give you the short version.
Sure.
The short version is, so first of all, it needs to fit our vision of having an impact in especially in the financial industry. So our mission statement is we want to rewire the DNA in banking. And you could argue you need to rewire the entire financial ecosystem, from banks, insurance, lenders, potentially even regulators, the way that all of this has been functioning. We've put the customer very often not at the center of the proposition. So making sure the customer is at the center of the proposition is what we're focusing on. It's been a little bit of a wake-up call for us because we're a big bank and we were not really paying attention to what was happening outside. And we've seen the emergence of payment systems of the big techs that have completely shifted the way that people transact, the way people invest, the way people think about banks. Do they even care about a bank? Could argue that a lot of people care about having a wallet and having money, but do they care about having a bank that they need to go to? I don't know. So we need to reconnect with society in a really meaningful way. So that's number one. And we've identified that in order to be meaningful to our customers, we want to develop and invest in 4 different sectors. One is around digital economy. Where do people bank? How do they bank? How do they save money? How do they want to think about long-term wealth management and these kind of things and provide solutions around that? So we've launched a number of ventures in that sector. We want to think about SME and trade. We want to support SMEs as what we call the missing middle. Ranjit, you're coming from India. In India alone, 65% of the economy is coming from MSMEs, right?
Yeah.
And they're highly underserved.
Yeah.
So how can we serve them better? And we have solutions for that so that we can educate them. We can provide business services. We can make them grow, provide loans that are more adapted to their needs and so forth.
Yeah.
Digital assets. So obviously 2022 was a big year for crypto, the good and the bad of crypto.
Yeah.
But we do believe that a big bank knows how to custodize, for example, currencies. We know how to custodize assets. This is something that we've been doing for a very long time. So things like that. And then sustainability and inclusion is our fourth theme. So that's the first step. And then how do I look at a business? Initially, apart from the pitch needs to have all the right ingredients. I don't need to provide a class on what's a good pitch, but mostly what I look at are 3 dimensions. The problem. Do I care about the problem? Do I think it's a good problem that we should be solving for? Is the solution credible? Is it feasible? Is it desirable? Is it viable? And then the third one is the team. Is the team the right team for it? Have they done it before? Are they charismatic? Is it the right composition of the team and so forth? And then obviously, then it's money and financials. But I would almost say this comes last.
Yeah.
Very good.
Yeah.
Although it's a great idea to have a class on how to pitch. I'm sure some of the aspiring founders would love that, but yeah, sounds great.
Yeah, absolutely. Harold, you said that it's a mix of sort of companies, that you do take companies which are outside as well, startups, and there's a chance for entrepreneurs to come up from within as well. So
that's right.
I don't know if this is possible at all, if it's not confidential, but if there is one of those startups that you mentioned, how did you take that into your fold, and what were these steps involved?
Absolutely.
That'd be great to know.
Absolutely. So it all starts with a team approaching us. If we like the team, we will provide a little bit of seed funding. With that seed funding, they will enter a stage that we call incubation. So that's the first stage that they would enter with SC Ventures. And during incubation, we'll provide some support around business model, around tech, around regulations, these kind of things. Typically, incubation, we provide them enough money so that they can do all the right validation around that. It will typically last about 3 months. At the end of 3 months, they will pitch our investment committee. That investment committee is made of internal and external stakeholders from the bank and outside, very senior stakeholders. And at that point, we will decide to fund them further and give them a bigger ticket. With that, they can go and recruit more team members, apply for licenses if it's a regulated business that they're launching, and a number of different activities. And we go all the way to Series A in the sense of the business that we incubate. And there's a final ticket after 12 months where we decide to fund them further or not. And then the business is up and running by itself.
Got it. So that's pretty organized kind of approach. And it's great to see that you're getting some external experts as well, just to vet them and see how is it going. It's not just an internal bank's point of view. Any hot tips for external startups seeking to be incubated by SC Ventures?
Yeah, I would say, okay, for the external, I would say the first thing is we actually have I'm going to do a little bit of promotion, I'm sorry, but you could go to Google, type SC Ventures FinTech Bridge, and on the FinTech Bridge, you can sign up. And what we promise, and it's a promise we deliver every month, will connect you to the business of the bank. So if you connect to the FinTech Bridge, the first step is participate in business challenges that we run there. And if you participate in the business challenges, there's a good opportunity that you win business from us. That's your first ticket. And the second ticket is, if you're at the right stage, we'll invest in you as well. Okay. So that would be my very first step. Go on the FinTech Bridge. And then that's the best way to be under our radar. Once you're under our radar, it's a typical dance. I would say we do a little bit of due diligence, obviously, but we look at, you have to be patient. You have to be super patient with us because we're a big corporate. We are a little bit slower in our decision process, although a lot better than a lot of corporates, but we're able to make decisions, and typically within 1 to 3 months, investment decision within 1 to 3 months. You have to demonstrate that you have a business that is, that is growing, that you're getting paying customers, and a tech that is quite different from other things on the market.
Perfect. No, that makes sense. That's pretty good. So the first port of call is the bridge, FinTech Bridge, right? SC Ventures Bridge. Yeah, perfect.
That's right.
Vidya.
And so if you extend that to specifically Insurtech, Harald, how does SC Ventures assess an Insurtech at the get-go itself? Is it at the concept stage? Is it at the idea stage? But you also said you are looking at something a little more mature. Is it even that applied even to an Insurtech firm? So it'd be great to know your views on that.
Yeah, so I would say the way we look at Insurtech So we would look at Insurtech in terms of a capability to other ventures that we're creating. Okay. Or so typically it would be embedded insurance that we'd be looking at. Okay. Or as we were speaking with Ranjit a little bit earlier, it would have to be around wealth. So how do you think about wealth? Is life insurance part of something that you'd be looking into, and these kind of things, right? So that's how we would evaluate Insurtech specifically, how they complement as a capability our portfolio, our ventures, and can we use that in order to have products that make a lot more sense and that people are actually looking for. Maybe one more thing that I think insurance companies do very well, they know how to score people very effectively. So they have access to data, a lot more data. And I think for us, that's a very interesting play because we were just talking about credit scores, for example, and alternative credit scores. And I think that these are areas that we're very interested in. How can we be more effective in rating people in a fair way, but also in a way that is going to make sense, right? That we're not going to take risks or too many risks.
Yeah. No, makes absolute sense. You mentioned even embedded actually makes a very natural fit for the banks. It is anyway done in a very physical way at this point of time with affinity partnerships. Yeah, makes absolute sense. So for the Insurtech entrepreneurs, are there any specific tips in terms of how can they raise capital from SE Ventures?
We just invested in a company, okay, so called BTO. You can Google it, which basically has a really interesting model for financial planning. And so obviously that includes life insurance. I think if it would have to be that Insurtech would have to be bringing something to a wealth solution, for example, or cash solution or transaction. It would have to be within a financial lens that we would look at it. Okay. And I'll just reference another venture that we're launching called Autumn, like the season. And it's really the combination of wealth and health that we're combining together. And we just partnered with a few insurance companies, including AIG, in order to provide more financial services around the platform. But it's looking at people's health, looking at their aspirations, looking at all this data, and based on that, how can we advise them of where to invest based on their appetite, risk appetite, these kind of things as well. So we are being quite creative as well. So if you're an Insurtech and you think there is an angle there, absolutely approach us.
Right. Now I'm just looking at Autumn. It says digital wealth and health all combined. And I think it makes a lot of sense as we've got a lot of these mental health issues on the rise. And we know finances are a cause of issues with disputes, conflicts, mental health. So it makes a lot of sense. It's a unique angle to get into it with you. Perfect. So now let's get into a little bit more kind of operational, tactical stuff. So once you've taken on a company on board to incubate, and perhaps even after they have left your incubation center, that is post Series A, you said, right?
Yeah, that's right.
What continues to be the level of the operational involvement, if any? Is it just a board seat, or how else do you kind of add value to the startup?
Very good question. I'll answer with a little bit of caveats, okay? Because it depends. There's different situations, but there is a model. So the model is we will remain shareholders, okay? Standard Chartered will be shareholders of the company. Initially, we're the majority shareholder because it's so early stage that the venture has not yet raised funds externally. It depends because, again, I'm putting a little bit of caveats because in some instances we do co-creation with clients, and in that case it's a little bit different, right? But so as majority shareholder, we'll have a position on the board. We'll also have some implication on the governance framework of the company. and we'll take an active participant.
Okay.
So just making sure that the company is independent, but is making the right decisions. We're a highly regulated company, as you can imagine. And so we need to make sure that the companies that we create, that we incubate, or that we invest do things in a compliant, risk-aware, and legal manner, wherever the market is, by the way.
Got it.
So you, in some sense, you become like a parent of a teenage, right? You can't really tell them too much, but at the same time, you are there around in some sense to guide.
And as a parent of a teenager, I'm just trying to see if the analogy is correct. But like absolutely. The guidance, the strong will that they are going in the right direction.
Yeah, exactly.
Without too much control. Yes, that's
absolutely.
That's a good analogy.
But on that same vein, how do you decide that maybe this venture investment is not working? When you feel, when you make the investment to pull a plug on a venture, when do you stop trying?
It's a very good question, and honestly, it's something that if you are going to invest and build companies, it's something you need to be prepared for, and it shouldn't come as a surprise, because normally you've put all the right system in place in order to be able to evaluate the company. And if you have the right system in place, you can tell early on, we thought it was a good idea, but it wasn't. And here are the reasons why. We thought the problem was big enough, but it's not. We thought the solution was different, but nobody cares about it. We thought the team was good, but actually the team was very corporate and not entrepreneur enough, etc. So it's something you need to be willing to do, because otherwise you're not being a venture builder and you're just running projects for corporate, and that's not the right mindset for launching companies and supporting companies. We have established as well a methodology that Google launched, actually, called OKRs. So making sure you track your objectives. Your objectives are measurable by key results. You track them on a quarterly basis, and this is what we do. And we sign off with all of our ventures that they agree on the OKRs we set for them. So all these things normally should not come as a surprise. It's always very sad, obviously, when we need to stop investing or stop supporting a venture. But in the process, we've discontinued a number of different ventures, actually, close to 20 in the process.
Got it. Now that is probably also a success metric, because you can't have zombie companies in your portfolio which are not really achieving their aims. However, and we got that whole thing about sunk cost, right? It's done. Do not take that sunk cost and keep going with these zombie companies.
Exactly.
Perfect. So now stepping back a little bit from a career point of view, VC, venture building, exciting space. What advice would you give to someone who is just starting out in the venture building industry? Or even you can talk about VC as well if you want.
Yeah, first of all, it's a choice you need to make. So I was an entrepreneur. I was managing at some point a company where we had close to 100 employees. It's a different mindset. When you're the CEO or one of the main partners in your company, you're the star of the show. You're at the forefront of your customers, of your investors, of everybody, basically. If you want to be on the venture building side of things, or if you want to be a venture capitalist, you're the support team. So you need to be comfortable with that. And you're more as almost a coach to some extent. You're in the background, you're a mentor, but you're not here to be the star. If that's your goal in life, then don't become a venture builder or a venture capitalist.
Yeah, I think that was the analogy I was going to use as well. Coach, not quarterback. So
that's right.
Yeah,
that's right. I used to have a coach that would say, actually, do what I say, don't do what I do. And that's, for me, that's...
Absolutely.
No, sounds good. Awesome. I think we've come pretty much to the end of the episode. Is there anything that we've missed asking you that you'd like to cover, Harald?
No, I'm just very excited about the MENA region. Obviously, we're based in Singapore. The core of the team is based in Singapore. So we have about 50 people in Singapore at the core platform, but we are expanding in a few different regions. We have a strong presence in Europe as well. And we're launching a few ventures in Dubai and Abu Dhabi. Quite excited by what's going on. We think it's a very active region. I was very impressed with some of the entrepreneurs I met there. Obviously, it's like a region that has done quite well for itself, and it's probably becoming the digital asset capital of the world as well.
Yeah.
So we will be launching a few ventures soon, and I'll be back if that's. Don't want to quote the Terminator, but
Yeah.
I'll be back.
No, I think you're very right. Recently, there was some news about instant payments coming and open banking. So a number of new initiatives being launched by the UAE Central Bank. So all that's going to be very helpful for the FinTech 2.0, as we call it.
That's right.
Should be very exciting times.
Awesome. So it's great to have you with us. It was just a pleasure to chat all things venture building and from a MENA perspective and also from a global perspective. So thank you for being with us.
Thank you.
Thank you very much, Vidya.
Thank you. Bye.